Next up, we have a more conventional panel that is discussing the topic from crypto assets to establishing infrastructure for digital assets. It will be chaired by Dr. Oliver Krause from Untitled INC. And welcome back, Oliver. Hi. It's great to have you.
Great to have you.
Yeah, I have the honor to moderate this really interesting topic. Brief intro from my side. I mean, we have seen now a quite dynamic development in the recent years of the whole crypto industry, and it started actually with retail, and the institutional side basically is moving into that space, and with that, the focus into infrastructure, into scaling, into security topics, and so on, is gaining more and more traction. And I have the pleasure to have here on the panel a number of experts here who are working in this space and providing solutions. That's Markus Honfelmann from Mikobo. Then we have Konstantinos Diagenis from Pricewaterhouse. Sorry for that. We have Niels von Schöneich-Carolat from Bankhaus Scheich and Tradias, that's the tech arm. And then we have Volker Braunsberger from Intas Tech. That's actually a company, he will tell us more about that, very well associated to Frankfurt School here as well. And finally, we have Seamus Donogh from Metaco. And maybe we just start with you, Seamus. Maybe you can introduce yourself a little bit, or your company. What are you doing in the space, in the infrastructure field? Where are you positioning yourself, and how did you personally maybe get into the space? To start with.
Thanks very much. So yeah, Seamus Donoghue from Metaco. I'm the Chief Growth Officer of Metaco. Metaco, for those that aren't familiar with us, we're a software technology company. We provide the core foundational infrastructure for primarily for banks, financial institutions, tier 1 institutions, to start them on their journey, basically, and what's very early in terms of building digital asset solutions. So really it's about providing that core foundation for, let's say, custody. Equally, custody comes in many flavors. We deliver many flavors, be that hardware-based and PC-based, even managing sub-custodians. And importantly, I think some of the slides earlier were talking about basically on-chain governance, but equally you need off-chain governance because your institutions, not everything's going to sit on-chain. You have internal processes. We have a full framework, which we now call harmonized in terms of managing securely all your processes, not just on-chain, but also off-chain. And really the idea is to build a platform, or it is a platform rather, that institutions adopt so they can offer custody to their clients. They can build effectively whatever use case comes up in the future. Basically, there's many different potential tokenization use cases have been talked about today, whether it's payments, securities, different types of securities, different jurisdictions. It's very early. We don't know what those will be. So importantly, we want a solution that's agnostic, not a single vertical that's basically out of the box, does everything, because for sure whatever does everything today won't do everything tomorrow. So it's very much about a solution that you can build your own solutions on top, equally agnostic to the ledger. There's so many questions in this space still. Which ledger will it be? You know, which use case will succeed? We're early, so you want to make sure you have optionality, and we deliver that platform optionality. So we're very much focused on working with custodians, working with banks. We work with a number of banks here in Germany, Europe, US, Singapore. My own journey, I 20 years in banking, running various trading businesses, building products. I got into this space in 2017 where I ran a Swiss crypto exchange in Asia. We moved to make it a short story, we moved from a non-custodial model to a custodial model. I asked how we were managing custody, and we had one trusted employee in the Ural Mountains in Russia managing all the private keys for our clients. And that started me on the journey that's probably not the long-term institutional solution you need. So that eventually led me to Metaco.
Yeah, so maybe you can just...
then I move on. My name is Volker Braunberger. My story is quite short. I started in the mid-90s as a management consultant, and I'm still working as a management consultant. My focus was and is still the supporting of the investment management industry on a global space. That means focus is on elaborating target operating models, and based on that is my first touch point was with blockchain, I think 3 or 4 years ago with first tokenization projects. And I use then this know-how combination together with Frankfurt School to found last year Interstech. Interstech is a specialized consulting company with a strong focus on supporting financial institutions, fee institutions, by elaborating digital asset strategies based on blockchain use cases. And the question is definitely, perhaps we're discussing that today, what is the right one? We are thinking that one of the right ones is tokenization of investment fund shares. That leads to another company. Therefore, there are two hearts beating in my breast. One hand side, I'm CEO of Interstech. On the other hand side, I'm a founder of Funds on Chain. Funds on Chain is a fintech which started last year and which aims to digitalize the investment fund industry on a global space by using blockchain technology. Perhaps we can face that later on. And that's why I'm here, and I hope that I can contribute in a good manner to this discussion here.
Niels.
Yeah. Hi, my name is Niels von Schneich-Kaulat. I'm Managing Director at Banco Scheich and Chief Revenue Officer at Tradias, our tech arm. What are we doing? We are a bank that almost exists now for 40 years. So we come from the traditional world. We are a market maker, liquidity provider in the traditional world. And since 2018, we are also active in the crypto area. So our main product is OTC trading and market making. So we are Europe's largest OTC crypto trader. We provide the infrastructure and we enable banks, fintechs, neo-broker, asset managers, high net worth individuals, corporates, and family offices that they can trade crypto or that their customers can trade crypto. And our second division, our second arm is digital assets and tokenization. So we are also very active in that field. We were the first ones who tokenized a convertible bond under the new EWPG law. We were the first ones who tokenized a fund that is then tradable 24/7. And yeah, right now we are looking on what we want to focus. And as market maker, you can imagine we are now very hard working on a secondary market solution that really works.
Yeah. Very interesting. So Konstantinos. Yeah.
Hi, my name is Konstantin Giannis. I will keep it short because I had the keynote before. So I'm partner at PwC at Financial Services. I consult basically banks, insurances, asset managers in the crypto space, and I do a lot of audits. So the security you're talking about, I do a lot of security audits in the blockchain area, in the crypto area. So I'm happy to discuss that with you guys.
Finally, Markus.
My name is Markus von Fehlmann. I'm head of business development at Mikobo. We are a fintech that has got two products, a tokenization platform and also a crypto securities register. We have done many things at first. I won't tell you now, and hand over to you.
Yeah, so thanks a lot for this intro. So really panelists who are deep into that field, and maybe some of you can highlight some of the key challenges you see now in the space and how this developed. Whoever wants to take the first one. So where do you see, where are now, what has to be solved on the infrastructure layers? Where are the challenges you see that have to be addressed? Yeah.
So if you don't mind.
Yeah.
We have done a lot of tokenization in the past in the real estate industry. So they were the first who considered this as a business case for them, and actually there were many people who really profited from that, but it was not able to grow on a larger scale. Yeah? So we always had issues with the digital asset custodians, and we discussed this topic here in this round yesterday and also outside the panel. That there is a certain squeeze at the moment in digital asset custodians. Actually, there are currently only two, and that's really a pity. There's a huge market. Everybody recognizes that the large custodians in the traditional business are investing in this. And there is insufficient competition at the moment, and we estimate that due to the period that needs to or is required to get the confirmation from BaFin, we will experience the squeeze for more than 12, maybe even 18 months, and that might spoil the advantage we gained over other European markets. And therefore, there's really a big topic that should be solved soon.
Yeah, so you're mentioning, focusing here on the German or European market in terms of the custodians, or also the global?
So we see that European issuers approach Germany because we have got the best legal environment to issue electronic securities or security token. So that's a perfect advantage, and we should start from it. But when the legacy community does not move into the new business, then it will be difficult to put this on a scale where it really comes up and running and builds further advantages. Yeah.
So it's a question of investment.
Yeah, perhaps I can, from our view, I think I would take a step back. What we do see, if we go to, I would say, traditional finance institutions, what we always do miss is a little bit education. I think I would totally agree that we have a quite stable legal environment here in Germany, but we meet still a lot of people outside. They are not aware of that. They are not aware of the opportunities that we are facing now. And we have out in the market, or sometimes even today, we are sometimes arguing out of the bubble. We are all aware that blockchain is cool and we have really good use cases there, but the established financial institutions don't see that currently. So from my view, education is key. Transparency and concrete usage of terms is key. Sometimes I still meet people, when I say Bitcoin, for them it's blockchain, and vice versa. It's a little bit a sad thing, but in the mindset, if you have a crypto winter, blockchain is down. And that leads for me to a situation that we all should use our know-how in this space to educate the other ones to come up to the mass adoption, not for crypto as an asset class, but also for infrastructure pieces. Yeah.
And I think maybe one, if I may jump in there, it's not about only the education, but it's finding the right people and having the right people in the spot for these different companies. To have the talent, because the talent is very rare. You can't find it easily, so it's really hard to find it. But on the topic you said, of course, we will have that delay of 18 months, but I still think long-term, Germany will be a hub for that topic, and we will have a lot of custodians here and a lot of knowledge. Just it will take time, as it usually takes, if you do something right and you want to have a lot of trust in the market. And I think the brand made in Germany can help here long-term as well to have the trust in Germany as well as a custodian.
And maybe one short addition, because in our opinion that's really important. It's also about the demand side. So right now we have a real lack in demand because people don't have the right access or they don't know it. So this pays all in the demand side. And one key of that is that we don't have real liquid secondary markets. So you can buy it, but you don't know what to do with it afterwards. And right now we only see bulletin boards that has regulatory reasons. So we need to find solutions to provide something that at least feels like an MTF, that you can hit the button and buy and sell, and that you know that you can always trade your asset like 24/7. That's very important, I guess.
Very important point.
Yeah, I would give a slightly more positive perspective on things, I think, because I think, of course, there's more education to do. I think there's more of a journey. There's skill sets required. But I think, having been in the space a little while, I think what I observe is we've seen incredible sort of innovation in the pure crypto space. But even at its peak, we peaked around $3 trillion market cap. It's still a tiny asset class. It's like a single market cap of Apple, for example. So I think coming to these conferences, I think a few years ago you were it was more the crypto bros telling the banks to come. It's exceptional. JP Morgan here is just before us has given all the details about the blockchain and their views of how all this works. So radical change in terms of how they view the asset class. I think you're seeing more and more banks embrace this asset class. And I think it was the same panel that mentioned one thing's clear is blockchain DLT is no longer going away. And I don't think that was always a consensus in the banking space. So I think there's a recognition that it may not be a completely peer-to-peer disrupt the banks. I think eventually if all assets sit on a chain, and you can think of all assets not just crypto, but potentially all securities, all assets we know, that could be a $1,000 trillion market. That will not all be self-custody with me walking around and all my private keys in the phone. It will re-centralize. And I think banks increasingly view that re-centralization opportunity is for them to capture. They're trusted, they have balance sheets. And I'd say, almost without exception, I just came from Sibos last week, 4 days of bank discussions. Typically, it's about messaging standards, pretty obscure or esoteric for most people. 50% of the topics were about digital assets and they were all building, and if they were not building, there was definitely a fear that they're being left behind. So I think things have really radically changed. It's still early in the journey, the discussion about the ledgers, which the use cases, they're all experimenting, and I think in Germany there's an advantage that you've got BaFin that's actually defined a clear roadmap around fund shares and bearer securities. You can build with specific use cases, you can go to market, so you're well ahead. But I think even where the regulations are opaque or confused, as one of the earlier, I think it was Linklater, it's presented about the US market, the firms there are building because they know it's coming. And they're investing now, and they're building capabilities.
Yeah, and I mean, if I might add here from my perspective, because we also built in one of my ventures in the field of sports invest, a platform to make such illiquid assets basically accessible and investable. And one of the key problems we face as well is that there is no secondary market, for instance. So this infrastructure has to be built to be attractive. Yeah? Otherwise, you can buy it, you can theoretically do it. It's a nice piece of tech, but what do you do with it? And that's one thing. And the second thing is certainly also from the more conventional actors here on the market and investors. They obviously are not prepared to take self-custody over their assets. Yeah? They want somebody to take care of it, to be sure. Even I myself sometimes want to be protected from my own shortcomings in that field, how to deal with crypto assets properly. Yeah? We have to admit that. So. Yeah, apart from that, maybe are there other big challenges? I mean, we need certainly a lot of investment in that space. It needs a lot of money to be built. There was a talent topic. Anything else that comes to your mind where you say that's really a big topic, why the infrastructure layer, and we are talking here more about the IT layer, not so much about the hardware infrastructure layer, why that has still some way to go, or where will it go? When will we be ready? Maybe things. Can we talk about that? What is your expectation here?
Yeah, I would like to take the topic and also what Niels said. It's not only a chicken and egg problem. So will there be sufficient demand? And the point you made about the size of the market, yeah, we have got an early mover advantage at the moment due to the regulatory framework, and we are losing this early mover advantage. And in the end, size will be the differentiator, or will be the ultimate factor that decides who will win the race. And we saw JP Morgan is going on that topic. I know that all the other large US custodians are working on that. We saw a chart from Société Générale, BNP is outside, and that's what we also recognize while working with our clients, that the foreign banks are largely overrepresented compared to the German banks. Yeah? So there is an insufficient coordination among the German banks from our perspective to push the technology, not crypto trading or something like that, but the blockchain technology and everything that comes along with the efficiency gains. And when we talk to them, we sometimes hear, well, in the end, the US will make the decision on which chain we will go, what technology shall be used, which kind of protocols and so on, because they usually dominate the entire capital markets. So we are waiting in order to avoid misinvestments.
Mm-hmm. Okay.
Yeah, I would just say, I think, when you look at a bank's current infrastructure, banks have been around 50 to 100 years, depending on which, and typically they're just legacy upon legacy layers, right? I think I worked at one of the German banks a while back, and they had, I think, 12 internal ledgers, right? There's no single source of truth, even in one firm. So I think increasingly is viewed as a generational opportunity to reinvent that stack. And I think it's important when firms go down this route that they're not making a choice that this will be the ledger to rule them all. There's probably not going to be one. There's different use cases that'll be more about, permission groups that are small for certain use cases. Other ones, public ledgers. We work. You mentioned SocGen. We work with SocGen. We work with BNP. Some of these banks, the way they look at public ledgers is as liquidity pools. So you can imagine, the ones with broadest adoption have the most liquidity. So when you start experimenting with things like tokenization, which is still It's still at early stage, it's still an experiment, so you hear deals about kind of one-off end-to-ends, but there's no secondary market, so it's really about a proof of concept in many ways, many different types of proof of concept. So I think it's important that you don't experiment with everything. Let's say there's a new chain out, I mean, there's a new chain out almost every day, has certain technical, maybe superior qualities. I think we need to not just chase the shiny objects. Let's get the use cases and things like choosing ledgers, one ledger to rule them all is not necessarily the objective day one. I think it's be agnostic to ledger, go with where the liquidity is, test your use cases, but ensure you have optionality and adaptability that there more chains will come and different use cases will present themselves. It could be different ledger based.
So you asked about expectation, what we expect. Maybe I can give some insights what we see right now in the market. For sure, almost all asset managers and almost all banks are right now working on that topic. So we are in the middle of the crypto winter. Crypto winter is always time for building something up, like building on the infrastructure, being ready for the next hype, right? And almost everyone is also in Germany is right now working on that, is working on projects, and is not only implementing a proof of concept, but it's really building up the infrastructure to make that topic really, really big. So we are working together with them, and we see a lot of activity in the market. So in the press, you always hear crypto is dead, crypto winter, but behind the scenes, everyone is very, very active.
So the capital basically that flew into the system via the billions and billions we saw in the last 2 years, they are put to work, let's say, and it takes several months or maybe 2 years or so to come to fruition.
I would just underline that that's totally correct, because even we as a small consulting company are involved in several projects which are kind of a pre-study just to think about what I have to do as an asset manager to buy crypto. What have I to do if I want to buy a crypto security? How can I prepare my legacy systems? That are typical questions and requirements that we have to fulfill with our clients. That underlines exactly what Niels said, that even if we are potentially in a negative time currently because of the crypto winter, the positive flip side is that even established players in the German market and in the European market are working on the preparation of installing and integrating crypto infrastructure, and crypto not in the context just on pure crypto assets, but using blockchain infrastructure, how to use it, how to integrate it in legacy.
And also, maybe if I might add here and chime in, also the UX UI is still quite pretty. There's room for improvement, let's say. Even for people who are have an affinity to it, it's not really fun sometimes.
Yeah, and I think what is important here to look at the markets. Of course, we have US, we have Asia. The retail market is much stronger there in crypto than in Germany. It's the Germans are from a mentality different, and I think to see that there are more than 20 applications at the regulator for custodian licenses, I think that's a big step, and I'm totally with you. That so many banks are right now working. All banks are right now working on crypto projects and have different ideas how they can participate in that market. I just think that we need to give it a little bit time, because it's not like they want to do the right thing, and they just don't want to go to market without having a finalized product. And I think that's a very different view from the mentality in Germany. I have the feeling that they want to do 100, 120% and then go to market, and other companies more tend to go with 80% to the market, and that's I think
an engineering approach. Or what?
It's a different approach, so that's why I think in the long term that waiting or working more on the quality of the whole project will help at the long term to in the market as well.
Yeah, I would echo the same thing. I think next year you'll see a better representation in the banners here from German banks, and I think one of the holdups, and I think it was in your presentation, you mentioned that there's a number of applications even from German banks with BaFin, and it's not a fast process, and some of them also need to go to the ECB for approval. So, and I think there's still some education from what I understand, even on the AML side, with related to crypto, in terms of the bank regulators. So I think there's still a journey. I think they're building, and I understand as well they are trying to hire and having a tough time firing the right skill set in the market. So the issues brought up initially are real, but I think the banks are still moving forward, which I think is very positive.
Yeah. What do you say for the future? What can we expect? Can we expect that the more disruptive forces in crypto will actually succeed and also bring real, let's say, innovation and a real disruption to the whole financial services and maybe wider token economy? Or will we rather see an opposite effect that the whole, let's say, anarchistic elements, let's say, in crypto will be more or less integrated into the legacy system and regulated basically away?
And I can say I'm totally convinced that we will see more and more tokenization projects, and more, I would say, do we talk, name it tokenized assets or digital assets, it doesn't matter, but that's why I think the future of the financial market will change. Yeah. Nevertheless, I think the legacy will remain a long-term period. It will, this short-term disruption I do not expect. But if you step into the investment fund industry, I think if we imagine that perhaps in the next 3-5 years we see an increasing volume of digital assets where a portfolio manager can use not only a fund share which is tokenized, but also the whole portfolio management potentially will set up on digital assets. I think perhaps the investment fund will disappear and we will see managed accounts perhaps. That means even there the investment fund industry could change, and this is not a long-term vision from myself. I think that we will see in the next 3, 4, 5 years. So I wouldn't say that disruption is key, but I think that we will see a totally change in the value chain in the investment management industry, the capital markets. That's my personal view.
To add maybe one last
comment. So we think that security token, this will be the new standard, and everyone will use it. But what we should not forget, we are now all experts, we are talking about it. When someone buys an Amazon share, he doesn't care what happens, how the share comes to Germany, what happens at Clearstream. Yeah? There will be just new opportunities. Things will be cheaper, will go faster. You can invest in stuff that you could not invest in before, but most of the people won't care that it's because blockchain. It will be just the technology, how it works, and they just get like new opportunities and they will use them. So I think blockchain will be a huge topic, but in a couple of years, this will be just normal for us, and we don't talk about it.
Yeah. I would agree. You shouldn't care what the technology ultimately is if it makes it better. So I would say I don't think the revolution anymore is going to be an idealistic, anarchistic revolution. We all manage or be your own bank. It's a wonderful idea. I wish that was reality, but I think the reality is if all assets are tokenized, it's just too much for be your own bank. I'm not going to walk around with that. I'm not going to share my keys with everybody. Otherwise, all we're doing all day is managing, friends' shards of keys, etc. So it becomes highly complex. So it will re-centralize. Banks will embrace blockchain for exchanging value. I think interestingly as well, I think banks will basically reinvent themselves with DeFi. I mean, you have an algorithm that runs 24/7 at zero marginal cost, and it can replace, as I think it was again JP Morgan earlier talked about, borrowing lending protocols can change the way banks intermediate. You can push this into an algorithm and move to a fee model. So you can imagine all the various functions the banks do is largely intermediation. It's very expensive from balance sheet capital costs, and they could potentially push that into algorithms and provide effectively embedded custody into DeFi. They're the regulatory guardrails, and they can bring their clients into that journey and reinvent how the bank looks. So very transformational and revolutionary, but I don't think it's a disruption as the original sort of peer-to-peer idea was.
Comments from your side, or should we wrap it up more or less and say we will see?
I guess we are running out of time.
Yeah, we are running out of time. Yeah. So thanks a lot to the panelists here. Give them